Mr. Satya Mittal. Mr. Satya is also not present in the meeting. Speaker shareholder number 5, Mr. Vaibhav. Mr. Vaibhav, please unmute and speak.
Yeah. Hi, sir. Can you hear me?
Yeah, sir. Audible.
Yeah. Thanks a lot for providing the opportunity. Sir, I have already. First of all, congratulations for great turnaround of the company. It is so heartening to note that company is on the right path after a long time. I have already submitted my list of questions. I hope you have them in front of you.
Yes, sir. We had received.
Yeah, so sorry for long list of questions, but this is the only time we can ask questions. So great if you can answer them point by point, that would be helpful. That's it from my side. I will not take much time.
Okay. Thank you, sir. Support team, can you call out next speaker?
Speaker shareholder number 6, Mr. Hitesh Kumar. Sir, please unmute and speak.
Yeah, am I audible?
Yes, you're audible.
Great. Thank you for the opportunity and congratulations on great performance last year. Sir, I had also sent the questions in advance. I'll just briefly talk about some which are critical. Sir, could you just give some understanding about the different product lines that we have and was the utilization for the same in FY25? I believe there was a new plant, new machinery that got commissioned in the first quarter. So I think in your opening remarks you mentioned 18 to 20% increase in capacity. But this is for which product and what is the current revenue profile or current revenue coming from that particular product line? Is it a completely new product line? Or is it the existing capacity that has got enhanced? And because these are advanced machineries, what kind of cost savings you expect to incur from this commissioning? Second is, sir, I think the Pondicherry unit you had sold long back. I believe that land is still there with us. Are we looking to monetize that? And what is a possible, proceeds that one can look forward to and some sense on the timelines? Sir, and also wanted to get some sense on the demand, sir. What are the customer profiles you're catering to both in India and outside India? What is your wallet share with some of these customers? And have there been new customer additions? If you can give some direction to where how you're looking to scale up the business from here, both in India and overseas. And this margin improvement that we had last year. I think the backward integration capacity is what you're talking about. I think if you can probably share some more insights to what this backward integration is. And have we seen the full benefit of that in our margins, or is there a room for some benefit to come in the current year? Your Q1 margins were at an all-time high of 20%. What is driving this kind of profitability, if you can give some sense? And again, what your CapEx plans are for the current year and the next 2 years? Sir, it's a sincere request if you can, please elaborate as much as possible, because there is very little information that we get to see on the company in the form of disclosures. So if you can at least do a good justice to this particular forum, it will be very helpful for us as shareholders. Thank you so much.
Thank you. Technical team, can you call out next speaker?
Our last speaker shareholder is Mr. Gautam Nandi. So please unmute and speak.
Am I audible, ma'am?
Yes, sir.
Thank you. Very good morning and namaskar. Respected Chairman, Board of Directors, my online fellow shareholder. Myself, Gautam Nandi from Kolkata, very old equity shareholder of your company. I'd like to give thanks to your Secretariat Department for sending me annual report along with notice and necessary joining link to email well in advance. So thanks to our respected Company Secretary and his whole team for rendering good services to our minority shareholders. Sir, you are organizing your annual general meeting through video conference, and I find it is a grand success like the previous year. So thanks again. Sir, I'm very pleased to receive your very good annual report, which is very, very informative and self-explanatory. Sir, I find more or less good performance in every segment, even in this challenging year. Almost every company is suffering. In this time, you are trying your best. You're doing good. Sir, Chairman, respected Chairman, sir, your speech was very, very informative and also very encourageable. So thanks again. Sir, you have explained everything regarding our company's performance. So no query from my side. Only one or two points I like to share with you, sir. Sir, what is the direct or indirect impact on our company after the implementation of the new rate of GST, which will be affected from 22nd of this month? Please tell us. Sir, what is your roadmap for the next 3 to 4 years, especially related to the growth of our company? Sir, our company is one of the leading manufacturers of a wide range of packaging products. I like to know who are the main competitors in our country. Sir, do you have any expansion program or any diversification program in near future? Sir, one request. Please provide speaker's serial number with your link which you are providing to us. This is very, very important for our speaker shareholders. There are so many meetings today. So it is very needful. Please maintain this from Sir, please continue this VC meeting in future as we may able to join from anywhere, sir. Sir, I am very pleased and very happy and also very proud to be a shareholder of your company. I have full trust with our strong management and so along with my family wholeheartedly support your all resolutions which you have already casted through our e-voting. Sir, looking forward with a positive outlook towards our company with higher profit margin, good dividend, and a return. May God bless you, sir. Stay safe, stay healthy. Namaskar, sir. Myself, Gautam Nandi, signing off.
Okay, technical team. Now we are moving to our proceeding. As there are no further speaker, now Sri Hemal Asa, full-time director, will give answer to the questions received from the shareholder through email. Moderator is requested to unmute the whole-time director. Hemal sir.
Good morning, all. I will go through the questions received through email one by one, and I will answer them also simultaneously. So, initially, the questionnaires received from Mr. Satya Mittal as in a mail. The first question is, who are our top clients and what wallet share do we have with them for our products? And the space we are in seems to be very competitive. There are both large players like SL Tropec and some other smaller unorganized players with cheaper Chinese machines. Considering this factor, how do we scale up going ahead? The response would be we work with many well-known FMCG as well as pharma companies to cater to the requirements of oral care as well as skin cream or ointment-related packaging. Our company is one of very well-established and organized player in this segment, one of the pioneer also, along with SL in this field. We started our operations in 1995. So we are probably in comparison with SL, we are not a small player in this segment. The second question is our asset base is very old. How is the quality and output of our products overall? Especially as many of our peers have completed recent expansions and are more modernized and potentially more efficient. What is our current total capacity? How much we are utilizing as of date? What can be the peak turnover from our capacity? Historically, we have shared a large share of plant and machinery remain underutilized due to asset aging and lack of funds for capex, maybe around 50% utilization only. What's the update on this now? We have started this expansion spree after a long time. What led to us commit to this capex suddenly? What exactly are we expanding into? Because in our annual report we have mentioned it as a backward integration. Also, in this, is this a replacement capex or a new capacity addition? Is it brownfield capex or greenfield? How much new capacity is being added? How much will this new capacity add to our existing maximum achievable turnover? What sort of visibility did you get from our customers to commit such a large sum? How much more expansion is being planned, if at all? There are so many questions being sent. I will try to answer all in a brief. Answers to above questions is yes, our assets are quite old, but we are all our critical machinery. All our critical machinery is sourced from machine makers who are market leaders in their respective field from Germany, Japan, Switzerland, that sort of machine makers. We have robust internal maintenance systems which help us in upkeep of the machinery 24/7, 365 days. This helps us in maintaining proper quality and efficiency of output from this of course, older asset base. Once we are able to make we were able to make our balance sheet debt free post the rights issue couple of years back. All of you must be aware of. We have started expansion as we feel there is handsome scope for an established player like SRMTL to grab more market share via expansion. Whatever capex we have undertaken or will be taking up is a mix of replacement of older machinery as well as a capacity addition, and we look at best opportunities in both the areas while keeping in mind available resources at our disposal. Another question is growth for us has been very slow historically. Why is that? And secondly, now in the last few years post COVID, there is a slight improvement. Now with this new capex, where do we see our top line in next 2 or 3 years? What sort of growth is possible for us? Answer is we have been able to achieve handsome growth in the top line in last couple of years, and we foresee a similar trend going forward for next 2 3 years. Another question is historically margins have been very volatile for us, but in recent few years, especially since H2 of FY25, our margins have been improving consistently. And in Q1 FY26, we have hit all-time high margins. Can you expand on what is happening here and what brought this change? How did we manage such high margins this year, especially when in our annual report we conveyed that in FY25 raw material costs as well as freight cost had increased a lot and were very high. Moreover, how consistent are these margins going forward, or will they dip back or to our historical single-digit level again? Also, given that this is a very competitive and commoditized space, and still we consistently make 40% GRM, which is very high, how are we making such margins? The prices of our raw materials are usually very volatile. Do we have the ability to pass on the cost to our customers when volatility hits? The broad answers to the above list of questions is yes, COVID era had its own challenges, causing abrupt spikes in input cost and multiple operational challenges, which ultimately affected the margins. Since last a couple of years, we have undertaken some backward integration, which involved capex also, and some same is getting reflected in increased margins for this year. Chairman's speech also elaborated on this. Uh, we ex- uh, we expect the same trend to continue in the times to come, and as long as there is no major volatility in input cost. Uh, as for the gross margins, 40-45% is a little bit erroneous figure, and the exact figures are given in the balance sheet. Please, you can refer. We are able to pass on the effect of increased RM cost to our customers in most cases, which also helps in maintaining the stable margins. Another question is, I believe exports are higher margin as we have shared in our annual reports also. And this year we have seen good export growth. So what is leading to such strong growth in exports, and going ahead, what sort of revenue contribution and growth do we expect from this segment? The answer is yes, the exports have increased in last year, which was direct result of our efforts to cater to new geographies and make our business risk-free of disruptions in any single area or geography. Our efforts continue in the same direction of increasing exports while simultaneously maintaining our domestic business share. Another question is the company has been dormant for a long time, but suddenly we can see aggressive growth, aggression across different aspects, repaying debt, expansion, fundraise, and, whereby promoter is increasing their stake. These are very positive points. So first of all, why this sudden change in stance after such a long time? And secondly, what is the vision of the management? Where do we see our company in next few years? Answer is all above events that you have listed in this question are interconnected and one leads to another, which took time in culmination as it involves approvals from multiple government agencies as well as legal process. But the goal and objective was clear from day one, that is to make the company debt free, expand capacities to increase footprint across the geographies, and ultimately satisfy all stakeholders like promoters, shareholders, employees, etc., who have been supporting the company in its struggling period. What can I say? What I can say is shareholders should be happy with this year's performance, and we expect to deliver similar results in the years to come. Another set of questions that have come from Mr. Vaibhav Barjatia. Yes. I will start with first question. Company's gross margin, sales minus raw material cost, has improved from 35% to 39%, and then in FY24 and in FY25 it is 42%. Can you please explain the fundamental reasons behind such a large improvement when capex was not commissioned into FY24? During during FY24 we carried out internal exercise to rationalize operations, which resulted in improvement of gross margins. Another question is, in spite of sharp increase in sales and improvement in backward integration activities, there has been no increase in power fuel consumption of stores spares and consumption of stores and spares in FY25. Can you please explain why? You must have heard in chairman's speech also that one of the major projects under backward integration umbrella last year was to install solar power generation plant, which resulted in substantial savings and reduced our energy cost. Another question is, what is the operational capacity of the company and what was the utilization in 25? Capacity utilization of Lamitube was to the tune of 85% of the operating capacity, and same was around 65% for our tube laminate business. Another question, what is the quantum of capacity expansion possible at our existing location? The answer is there is enough space available at existing location to accommodate our expansion plans for next 4-5 years. Another question is, can you please let us know the capital expenditure plan for next 2-3 years and whether this capex will be oriented towards margin improvement project or towards capacity expansion? Answer is, capex is planned as and when opportunity arises and will be communicated via official channels. Any new capex will always be a mix of 3 objectives, namely capacity expansion, replacement of older machinery, and thirdly margin improvement also via backward integration. Another question, would it be correct to say that exports are more profitable than domestic sales? The answer is yes. Another question is, company has export obligation of around 400 crore over next 4 or 5 years, vis-a-vis 45 crore export sales for FY25. Would it be possible to meet such an export obligation? That would be, and what would be the focus products and markets for the exports? To answer this, all I can say is company will not default on any export obligation. We are targeting new areas of Europe and Africa to cater to new geographies. Now, another question. Russian exports have picked up significantly during the last year. Can you please explain the reasons? The answer is just that the Russian market had a higher demand, so nothing else. We have always been trying, but now there is a more demand in that market. Another question is, can you rank Europe, Asia, and Russia in terms of profitability? Which are the highest profitable export markets and which are the least profitable markets? To answer this, I cannot divulge on this business sensitive information in a such a flat manner. Another question is, what kind of products are included in specialty packaging plastic products? It's pharmaceutical packaging in pouch. Another question is, can you please provide your views on demand and supply situation in lamitube and tube laminate industry, in particular in India? What are the likely capacity additions in the industry over next 1 or 2 years? Currently, there is more than enough capacity available in the market than required. Still, further capacity expansion is taking place regularly in laminate tube segment. In tube laminate segment, there are no further expansions visible in this year or next year, but capacity is more than enough. Another question is, company's gross margin, sales minus RM cost has improved. I think this is a repeat question, so I will skip this. Another question is, in spite of sharp increase in sales and in backward integration. Yeah, this is also a repeat question, so I will skip this. The next set of questions came from Mr. Hitesh K. And the first question is, what is our any update on the sale of Pondicherry unit? The sale is long pending. Are we incurring any cost? What is your? The answer is, we are not going to sell Pondicherry unit in near future. It has been removed from the up for sale from balance sheet. The only cost related to security and upkeep of the facility is incurred for that unit, nothing else. So there are no running operations in that unit as of now. Another question is, could you please share your growth plans for both India and overseas? The answer may be repetitive. Our objective is to increase footprint in foreign markets while maintaining domestic market presence. Another question is, there is a sharp improvement in profitability margins in FY25. This is a repeat question. Is this sustainable? Also, they asked, and I have answered that also. Another question is, the AR states that the 25 crore was spent on capex for backward integration in FY25. Could you please elaborate on this and what benefits are we likely to get from this expansion? The answer is, backward integration meant we created capacity in-house for certain processes for which we were dependent on outside job work earlier. Same was mentioned by chairman also. Another question is, since the total capex in FY25 was 47 crore, out of which 25 crore was backward integration, what was the remaining amount spent on? The answer is, the remaining amount was spent in capacity addition of laminate tubes, which remains our major product. While Mr. Gautam Nandi spoke, whatever he had questioned, all the points have been covered in earlier questionnaire. Only one thing he has asked is not covered, that any direct indirect impact do you foresee in due to the recent GST rate changes, because packaging or converters or plastics or polymers are there are no changes in GST, so I think we are neutral on this and we should not be affected in positive or negative way with the recent GST changes. That's what all I can say. I think almost all questions have been covered. Mrityunjay?
Yes, sir. Now we are moving our proceeding. Pursuit
report for the financial year ended March 31st, 2025, together with the board's report and audited financial statements, has already been circulated to you in advance. I take this opportunity to highlight the company's performance, industry trends, and key developments during the year. The packaging industry in India continues to demonstrate a strong growth trajectory. The market is estimated at $101.12 billion into 2025 and is projected to reach $169.73 billion by 2030, registering a CAGR of 10.73%. Flexible packaging is key growth driver, expected to grow at 11.46% CAGR, driven by demand from FMCG, e-commerce, pharmaceuticals, and food processing sectors. Government initiatives under the Make in India program, along with increasing consumer awareness and technological advancements, are shaping the packaging sector. Growing emphasis on sustainability and eco-friendly packaging solutions is creating opportunities for innovative, recyclable, and biodegradable products. Your company is an ISO 9001-2015, ISO 15378-2017, GMI and DMF Type 3 certified company, engaged in manufacturing a wide range of laminated tubes, tube laminates, and flexible laminates, catering to oral care, pharmaceuticals, cosmetics, and FMCG sectors. Our consistent focus on quality, innovation, and customer-centric solutions has enabled us to strengthen our market presence, both in domestic and international markets. During FY 2024-25, your company delivered strong growth. Revenue from operations stood at rupees 207.84 crores, up from rupees 177.70 crores in FY 23-24, reflecting a growth of 16.96%. EBITDA improved to rupees 31.98 crores from rupees 16.54 crore last year. The net profit rose significantly to rupees 51.34 crore from rupees 9.96 crores after accounting for deferred tax adjustments. Export sales also showed robust growth of 38.14%, reaching 46.54 crores. This performance demonstrates the positive impact of our background integration initiatives, capacity expansion, operational efficiency, and robust export order book. The year under review saw significant progress in capacity expansion and technology upgrades, reinforcing our vision of becoming a fully integrated, quality-driven packaging solution provider. We commissioned a state-of-the-art multi-layer film plant from Germany in June 2024, strengthening quality control, reducing dependence on external sourcing, and improving efficiency. In April 2025, we added advanced tubing machines to produce a wide range of tubes, boosting laminate tube capacity by around 18 to 20%. This strategic investment will enhance revenue growth, margins, and operational excellence, positioning the company for long-term success. Sustainability remains a core focus, and I am pleased to report that our 1.3 make our rooftop solar power generation facility became fully operational in July 2024, generating nearly 2 million units of clean energy and resulting in a saving of 1.36 crores in power costs during the year. We continue to strengthen our presence in overseas markets, which has contributed significantly to our growth, and remain committed to delivering packaging solutions that meet global quality standards. During the year, the company had contributed rupees 7.80 lakh exclusively towards healthcare initiatives as part of its CSR commitment. As we look ahead, your company is ready to build its strong foundation with recent investments in capacity expansion, renewable energy, and advanced technologies, strengthening our market position and operational efficiency. Our strategy will remain focused on optimizing cost structures, enhancing margins, and innovating to provide environmentally sustainable packaging solutions. With these initiatives, I am confident that your company will continue to achieve consistent growth in revenue and profitability in the years to come. I would like to express my sincere gratitude to our shareholders, customers, suppliers, bankers, and regulatory authorities for their unwavering trust and continued support. I also take this opportunity to extend my heartfelt appreciation to our employees for the dedication, hard work, and invaluable contributions to the success of our company. On behalf of the board, I would like to convey that we will continue to strive for operational excellence, sustainable growth, and enhanced shareholder value. Thank you all for sparing your valuable time to join the AGM and for your continued faith in our company. Thank you.